If you've been thinking about buying or selling a home, you've probably said this at least once. I'm just waiting for the interest rates to come down. And you're not alone. But here's the truth. Most people don't actually understand how interest rates affect the housing market. Today, I'm going to explain it in plain English, so you can make a smart decision instead of an emotional one. Hey, I'm Jeff St. Germain with the St. Germain Real Estate Group. I help buyers and sellers navigate the market with confidence, even when the headlines feel confusing or overwhelming. And after helping people through high-rate markets, low-rate markets, and everything in between, I can tell you this. Interest rates matter, just not in the way most people think. Interest rates affect three main things in real estate: monthly payments, buyer demand, and competition. When rates go up, monthly payments increase. When rates go down, payments feel more affordable. That part is simple. But what most people miss is how interest rates change buyers' behavior, and that's where the real impact happens. The biggest myth I hear every single day is this: I'll just wait until rates come down. Now, on the surface, that sounds like a smart plan, but historically, it often creates more problems than it solves. When rates drop, more buyers rush into the market at the same time. Competition increases, multiple offers return, and home prices often rise. So even though the rate might be lower, the overall cost and stress can actually be higher. For buyers, higher interest rates don't eliminate opportunity, they change the strategy. In higher rate markets, buyers often face less competition. This means more room to negotiate, more seller concessions, more flexibility with inspections and terms. And here's the most important thing to remember. You can refinance an interest rate later. You cannot renegotiate the purchase price once you buy the home. Buying smart matters more than buying cheap money. For sellers, interest rates don't stop homes from selling. Overpricing does. In a higher rate environment, buyers are more cautious, which means pricing and presentation matter more than ever. Homes that are well prepared, well marketed, and priced correctly still sell. Homes that chase the market or ignore buyer reality tend to sit. The market doesn't reward optimism, it rewards accuracy. So let's answer the big question. Should you wait for interest rates to come down? The honest answer is, it depends on your life, not the headlines. Job stability, family needs, lifestyle goals, long-term plans. Trying to time the market perfectly is nearly impossible. The people who succeed aren't the ones who wait for perfect conditions. They're the ones who make informed decisions. Now here's the mindset I want you to remember. Marry the house and date the rate. If the home fits your life, your budget makes sense, and your plan is solid, the rate is temporary. Waiting out of fear often costs more than moving forward with a good strategy. If you're confused about interest rates or unsure how they affect your situation, you're not doing anything wrong. This market is noisy. If you want clear guidance without pressure, feel free to reach out. I'm always happy to talk it through. And if this video helped, hit like, subscribe, and share it with someone who keeps saying they're waiting for the rates to drop. I'm Jeff St. Germain, and remember, let's make your next move the right move.